It is easy to believe that you need at least $50,000 to start investing, but this is completely false. You may easily start your investing journey with as little as $5,000. No matter your level of experience with money or if you have $5,000 windfall to invest, there are several options are available to you. There are many tried and true, well-known ways to invest $5,000, and you may not think of them while pondering ways to put your money to good use at first. What is the best method to invest $5,000? Is an impossible question to answer. Many factors come into play while making this kind of decision: your age, financial status, and time frame for the investment. With this in mind, here are ways to use your next four-figure chunk of money with $5,000. Hey folks, this is Capital Finance, your go-to channel for business ideas, entrepreneurship, investment, and personal finance. When it comes to investment, it's vital to remember that one of the most critical factors to consider is your own personal risk tolerance when it comes to investing. To put it another way, it refers to your willingness to take losses to increase your investment portfolio. The prospective return on investment is proportional to the associated level of risk. Hence, the larger the potential return, the greater the related level of risk. With this in mind, let's begin. Number 1. Invest in high-quality dividend-paying stocks. Investing in high-quality dividend companies has proven to be one of the most profitable investment methods. Dividends and the stock's rise in value are how you may profit from your investment. In specific ways, the two are connected. An appealing investment opportunity is a firm that consistently pays dividends of a high percentage, and the same firms are also leaders in their fields and have long-term price growth histories. There's even a term for the best dividend-paying stocks, and that is dividend aristocrats. These well-known corporations have been consistently paying dividends to their shareholders for decades. In addition, they have been continuously expanding for at least 25 years now, and there are a few paid dividends of more than 5% every year. You'll need a commission-free trading account with a brokerage firm for dividend aristocrats. It's wise to consider Ally Investment when doing this. Stocks, ETFs, and options trading are all free at this brokerage firm. So investing in dividend aristocrats is a great way to diversify your portfolio. Number 2. Invest in international bonds with high percentage yields. Interest rates in the United States are at an all-time low right now, so it's challenging to make a good return on bonds. However, adding overseas bonds to your bond portfolio might improve your returns. In certain nations, the interest rates are greater than those in the United States. As a result, adding bonds from these nations to your portfolio may help you earn higher returns. However, currency exchange rates pose a great risk to overseas bonds since intercontinental currency values alter daily. If the value of the currency in the country where you are keeping your bonds decreases, your returns may be lower. Your bank account might be depleted. A high-risk endeavor. It's better to leave this to the experts. The good news is most robot advisors automatically incorporate a foreign bond position in your portfolio's allocation. Number 3. Put it in a health savings account. Often abbreviated to HSA, health savings account functions similarly to an individual retirement account, IRA. A personal plan allows you to contribute up to $3,550 per year, while a family plan allows you to contribute up to $7,100 per year. In addition to allowing you to deduct your donations from your taxes, your investment income will grow tax-free. Funds withdrawn from the account to pay for IRS-approved medical expenses can be taken out tax-free. Any funds you don't withdraw for medical expenses can remain in the account. You can invest the funds in the account just like an IRA. holding stocks, bonds, and mutual funds. To create a health savings account, or HSA, you'll need to find an investment broker that handles these accounts. However, a brokerage business will allow you to invest in a stock and bond portfolio, which can increase your money over time. Number 4. Diversify your investments through investment buckets. Consider using investment buckets to ensure that your assets align with projected financial demands. For instance, you may have emergency money in one bucket. You'll need it if your income is interrupted or if you incur substantial unanticipated costs in the near future. To keep it safe and secure, it will need to be in a short-term account. This bucket should be kept in a high-interest savings account. Another bucket is retirement, which necessitates the establishment of an investment account to generate long-term capital gains. This bucket is well suited for holding growth-oriented EFTs in an investment brokerage account. There might be several categories for the medium term. Saving for a property down payment might be one example of this. Another option is to put money aside for your children's future education. Future financial demands that aren't as urgent as an emergency fund but required long before retirement will go into the intermediate bucket. Investing in a taxable brokerage account or even with a robo-advisor for the medium term is also an option. It should be less risky than a retirement account because the cash will be needed much sooner. Number 5. Pay off high-interest debts. Debt repayment is one of the finest investments you can make, even though it may sound like an oversimplification of the situation. A 22% interest credit card rate of return is locked in if you pay it off at the end of the month. Then there are basically no other investments that can continuously pay you 22% returns. With a 22% interest rate, you may lock in a $1,100 yearly yield by putting $5,000 on a credit card. To avoid paying interest, consider making a balance transfer to a credit card with 0% annual percentage rate, or APR, rather than carrying a debt. After that, you can use your $5,000 to make an investment in one of the other possibilities presented. A 0% introductory APR is presently available on several credit cards for 18 months. Even if you decide to invest your $5,000 nest fund elsewhere, you may still take advantage of a 0% APR to avoid excessive interest. As a result, your monthly payment will be reduced, and you will be able to pay off your credit card sooner. Number 6. Purchase commission-free ETFs. ETFs have a massive benefit over mutual funds in that they don't impose load fees, unlike traditional funds. It is possible for mutual funds fees to rise to 3% or more. It's also possible to charge them both upfront and the point of sale. Investing with such fees means less money in your pocket. ETFs are the superior choice. They don't charge load fees, and their expense ratios are lower than mutual funds. This is significant because even though you aren't aware of them because they are deducted internally, those costs are levied yearly. The best part, though, is that there are investment firms that do not charge trading costs for ETFs. One of these brokers will allow you to open an account and invest in commission-free ETFs. Investing in the long term will benefit from this. If you have a beginning budget of $5,000, it is recommended that you select no more than 1, 2, or even 3 of the opportunities presented in this video. However, as your portfolio expands, you should begin to diversify. If you're just starting off, $5,000 is enough to get your finances on track. You should, however, keep an eye for other ways to boost your long-term investing success as your portfolio and experience grows. If you've been putting off starting your investing adventure because you don't have enough money but now have at least $5,000 accessible, you should stop procrastinating and get started. One of the main secrets to effective investing is to get started as early as possible. Even if you've been postponing for many years, right now is the very ideal moment to get started, and $5,000 is more than enough. That's it. Thank you so much for finishing this video, folks. Do me a favor and smash those like, subscribe, and bell buttons to get notified of our new videos. See you next time!